Who saved the stock market today and what turned around Friday at the end of this week? Hi, my name is Jeff Wright. It's Fish Creek Capital. It's Friday, November 21st. Stick with me and we're going to talk about who saved the market and is Nvidia worth it? First, what saved the market today? The futures actually were down really low last night. Again, bear with me. This is live and unedited, so you're getting the real deal here. The S&P futures, they were as low as 65.25. They went as high as 66.77. So that's a good bit different, 150 points or so, and then have landed around 66.31, up 1.13%. So what happened? So this morning, really what turned it around, John Williams, he is the president and chief executive officer of the Federal Reserve Bank of New York. He was speaking at the Economic Club of New York this morning, and all week part of the issue has been, one, AI, and then second, the odds of having a rate cut in December dropped to like 40%. So those were kind of the two big issues this week, or part of the issues, at least anyways. Well, this morning he came out talking at that Economic Club in New York and was saying, well, we might actually do a rate cut in December, or there might be one in the short term. So that's hint for December. So that actually shot up the odds of a rate cut. I think, let's see here, to like 73%. It was down to 40%, and now it's up to 73%. So market took that as great news and ran with it. It was, up over 600 points again at one point. I think we closed up 500 points on the Dow. And there was another midday, I think, comment by Trump also around China and Nvidia's chips, and could they, would he let China, buy some chips? And that helped also. That was around lunchtime, around midday. So let's shift into Nvidia. Let's talk about Nvidia and just some of the AI. Again, I want to kind of review that to end the week real quickly. Part of what we focus on here, and this is so critical in your plan for investing, is, there's hype and chasing stocks, trying to time the market or get in and out of stocks, hoping that you pick the right stock. Like, that's really hard. I've tried to do that. It really doesn't work. For most people, it doesn't work. I'd say for 95% of people, it doesn't work. And so that's what I'm using here at Fish Creek Capital to help you with your investing plan, is learn from my mistakes and invest in good, strong, growing companies, strong cash flows, good management, low debt. Yes, all the things that you hear Buffett talk about, and also companies that are returning cash back to shareholders in the form of dividends. And that's not really, as people, it's boring. So people don't get into that as much, frankly. But what you'll see, and I want to go over some of this AI trade just now, again, real quickly. So let's look at some of the things, and then we'll end with Nvidia, because Nvidia's earnings were, Wednesday after the close, I believe. And so that part of that this week was, will Jensen confirm or deny this? Are we in an AI bubble or not? And he was emphatic that we were still in the early parts of the AI story, and that Nvidia was in the best place to be able to benefit and profit from that story. And we're all good to go. So let's look at some of the stocks, though, and we'll end with Nvidia. So one of the sectors that has been really hot is quantum computing. This information came from CNBC. IONQ is the company and the ticker. They have a $14 billion market cap, and they have $100 million estimated revenue for 2025. So that's an example of a company that you don't want to buy, at least long term. That is total speculation, and you're likely to get burned on that. The high just even recently was $84 a share for that stock. It's currently $41 a share. So again, $14 billion market cap, and they have $100 million in sales. Like, that's crazy. So that's an example of, I would say, a bubble. Let's move to rare earth. Rare earth has been real popular, and MP Materials is a company that has benefited from that. They've got contracts with the government, with Apple, I believe. They've got like a lot of good news coming out. They're up 254% year to date. They have $232 million in revenue. Like, that's it. And they've got a $10 billion market cap. So yeah, if you would have bought MP, you would feel like $1 million. You would have made $1 million actually, up 254% year to date. But a $10 billion market cap with $230 in revenue, even if they've got all these contracts and expected future growth that is yet to necessarily be seen, like, that's a bubble in my opinion. That's not necessarily a good investment for the core of your portfolio. Total speculation on where that would go. Like, if you're paying that high of a multiple now, just, you want to be careful, not very smart. And then finally, an AI company is Palantir. They actually make money. PLTR is the symbol there. They do have earnings, but they're up 104% year to date, $155 stock, but they're at a 362 PE for the trailing 12 months. That gives them a $368 billion market cap. So is it worth that much? Seems kind of pricey to me. Again, this is just for educational purposes. I want you to think and look at the actual companies you're investing in as an owner. Think like an owner, as a business owner. This is pretty pricey. I don't think there's any way around that. The 300 PE, $368 billion market cap. They're already up 100% year to date. Yeah, that might be a bubble. So that covers AI, rare earth, and quantum computing, all three industries that have done, really well this year on a short-term basis, and that have been super popular and super, super hyped up. And so Nvidia, let's end with Nvidia. They kind of drive the AI story. And when you think of AI, you think of Nvidia. People have made a lot of money off of Nvidia over the years. And that's where I wanted to just kind of quickly talk about the difference in these, the companies that I just told you about that were super speculative, a lot of future earnings potential, but not necessarily earning a lot right now with crazy multiples. Well, Nvidia, they've actually been making money for a long time. They're a totally different type of company. They've had low debt for a long time. They've had good management for a long time. They've had strong cash flows for a very long time. Just even, on the call this week, they talked about 75% gross profit margins, which is crazy, crazy good. I think I mentioned that earlier in the week. So that's Nvidia's in a totally different situation, and it's up 35% or so this year. That probably has changed a little bit between yesterday and today, but it's done really well. But they're actually not that these other companies aren't real companies, but they've got a track record, and they actually have a strong balance sheet to back up the performance that you're seeing. So that's a key difference when you're looking at investments and looking at companies as an owner. You want to look at those things. So even just quickly going over it, those highly speculative stocks are highly speculative. But even if you look at an Nvidia, they've got a little bit more of a history there, a strong balance sheet. It's a totally different conversation. Nvidia gets a lot of critics, though. One of those critics is Michael Burry. He's super popular, for The Big Short, made a ton of money, billionaire, crazy smart. He even came out on Wednesday on X and was talking about how he feels like Nvidia is, one of the negative things you'll hear about Nvidia is that they are hyping up all these numbers and that they can't fulfill the standard that they set on what will happen with the revenue and the spending and the investments that they're making, and all these companies. They all kind of go together, and that's been highly criticized. And Michael Burry was on X criticizing that very same thing. And he talked also about how they have offered stock-based compensation. You'll hear it referred to as SBC, to be able to pay their management and executive management, and he's suggesting that it actually diluted owner earnings and was a very negative thing. He sees it as a very negative thing for Nvidia. But if you look at the, what has happened, he was referring back to 2018 through now, basically, 2025. So this is what was good. Again, going back to Nvidia actually is a real company that's making strong cash flows. So I've got this right here. And again, we're live and this is unedited. So the market cap grew despite Michael Berry. Again, he's super smart, knows what he's talking about, not at all challenging him. But another perspective on this is Nvidia's market cap grew from 120 billion in 2018 to over 4.6 trillion by 2025. So that definitely challenges the dilution narrative from the stock-based compensation and the return that was delivered to Nvidia shareholders during that same period. Let me make sure I tell you this correctly. The total shareholder return from January 2018 until November 21st, 2025. So that's today. And again, let me just make sure it. This is off of a stock price of $180.78. And actually, Nvidia on January 31st, 2018, had a stock price of $6.08. And that is post all splits. There was a 4-to-1 split in 2021, a 10-to-1 split in 2024. And again, today it's a $180 stock. They've paid dividends since 2018 also. A very modest dividend, but they have paid a dividend, which we love. So the total return, despite the narrative of there's been stock dilution, share dilution with this compensation package, has been 2,873% since 2018. So, hey, that sounds like a pretty good return to me. So in this case, I would argue that, hey, that stock compensation incentivizing management actually worked, and you were rewarded tremendously as a shareholder owning Nvidia. So even with today's numbers and having that kind of return, Nvidia is not really overpriced. I'd say, like, if they're able to grow with the 40% growth rate, which based on adjusted operating earnings, they're looking at a still annualized return that's pretty strong. Future stock price of $369. And that information is coming from fastgraphs.com. So, they've got a blended PE right now of 41. If you go off the last 5 years, that's an average 41 PE, fair value ratio, a normal ratio of 48. So, it's this again, this is just education, entertainment purposes only, not investment advice. But if you're looking at AI companies, that's why you want to focus on a company like Nvidia, in my opinion, because they've got the numbers to back it up. They've got a history of backing it up. And when you compare that to some of the speculative stocks in quantum computing, in the rare earth space, in the AI space, you just got to be super, super careful. And you want to dig into these companies a little bit before you just start making purchases and trying to chase. It's a bad way to plan for retirement, grow your net worth, create generational wealth. If you have questions about that, I'd love to help you. Please reach out or visit us at fishcreekcapital.com. Click on Learn More. I'd love to help you. Also, please subscribe and like, and we'll see you next time. Have a great weekend.